What's going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So my last video that I posted, and I really discussed a lot about putting money in Verizon, but this stock right here, National Health Advisors, was too attractive of a stock to say no to right now. So the price per share is right around the same compared to Verizon, but this dividend history and understanding this real estate investment trust is very attractive. And I couldn't say no to it when I sold my eBay stock and my Norton LifeLock stock. So I'm going to do a quick stock and dividend analysis on National Health Investors, and I'm going to show you what their real estate investment trust is about. So again, if you guys are new, make sure you hit that notification bell so you don't miss future videos, because I love doing stock and dividend analysis videos on my stocks. And again, I'm not a financial advisor, but some of the videos that I post, a lot of you guys don't even know about some of these stocks, and these are pretty attractive stocks right now to help you with your dividend portfolio, and they could help you with your dividend portfolio. Again, I don't like to make promises, but it's down. The real estate sector is down right now. Eventually, once the bug goes away, everything's going to jump right back up. So let's look at this stock real quick. Right now at $59.44. Its dividend date is September 29, 2020. The dividend yield 7.38%. The beta is 0.75. Market cap is $2.664 billion. Its dividend is $4.41. It gives off a dividend per year. If I own one stock, that's how much it gives out a year, which is very attractive. So I'll show you how many shares I own at the end as well. So let's really look into the stock. So on their website, they have partnered with 37 operating partners and manage 243 properties across 34 states. Their diverse portfolio is hand-selected to ensure high-quality properties and outstanding relationships with partners. So they own 243 properties, 37 operating partners in 34 states. Senior housing is big. They own 162 senior housing buildings. I didn't even realize this. What is this? Bickford. This is kind of where I'm from. Very close to Northeast Ohio. I would consider it Northeast. Bickford Senior Living. There's another one. Brook Retirement Communities. Who else do they own? Here's American Healthcare LLC. Looks like a skilled nursing rehab. So skilled nursing rehabs are getting a lot bigger because, unfortunately, the obesity rate is getting higher. I'm a registered nurse. I work on a cardiac step-down floor, and there's been research and articles out about people getting sicker going into the hospital. And unfortunately, people who have a lot of comorbidities, obesity, diabetes, kidney injury, acute kidney injury, or like end-stage renal failure, those people are tore up from the bug. If you know what bug I'm talking about, it's pretty simple to say why the economy's down because of the bug. But people are getting sicker, okay? And these guys even own like medical offices, which is really interesting, in hospitals. What hospital is that? Quorum Health Corporation. That's pretty interesting. And who's the other one? Behavioral health system. So they own a behavioral health system, which is really interesting. They're building. So people pay rent, and they increase their rent. So the hospital I work at, they're actually paying rent to someone to keep their skilled rehab facility. Medical offices, they increase their rent to get money. That's how people in real estate get money. And these guys have to reward the investors so that they don't have to pay a penalty. So usually the rule of thumb is, and you can correct me if I'm wrong, 90% of their earnings go back to the investors, 10% go back to them. So these guys are well diversified. Okay, senior housing's big. And people, unfortunately, like I said, there's higher amputations now. There's diabetes. Diabetes is off the chain. In 2050, they're saying 1 in 3 is going to have type type 2 diabetes, and 1 in 3 is going to be obese. So that's pretty scary in 2015. I mean, just look at people. I mean, exercise really isn't that big anymore. People really don't emphasize that. I mean, I invest in myself and my health. I think that's very important in eating healthy and living frugal. But today I'm not going to, preparing for my exam. I'm not going to lie. I'm going to probably eat at Penn Sub and do my little ritual for good luck, my good luck charm. And I've been studying like crazy, so I'm not sweating like right now, preparing for my exam. And I probably will be studying until about midnight tonight. So understanding this whole perspective and what NHI is about is very important to diversifying your dividend portfolio. So I invest in LTC. I invest in, I had rich uncles and they went down the tubes. I invested in Fundrise, they're well diversified, Realty Income, Store Capital. I have all these other type of stocks, Arbor Realty Trust. So this is well diversified in the healthcare, kind of like the healthcare REIT. So that's important when you're looking at certain stocks about how they're doing and if they're improving or getting better, or I just see the future being bright with a stock. And I'm going to show you how it's done against the S&P right now, and then we'll go over its dividend history. So since inception, it's been down against the S&P. Somewhat understandable. I mean, these guys are trying to get going right here, and then the recession hit and they took a nosedive. Man, I wish I had them at $25. Then they're starting to come back. S&P slowly taking over, and then it took a nosedive at $37. Man, I wish I got that at $37. So if you look at the past 5 years, they've been right in line with the S&P and took a nosedive. So I like to see how they do in the past 5 years against the S&P, as well as their history. And this is a stock, I always ask myself, if I'm looking at a stock, is it in demand? Because I was saying that I'm looking at Verizon, I'm probably going to get Verizon, which I can almost guarantee I'm going to get Verizon, and that's a stock that's in demand. This stock is in demand. Unfortunately, people are getting older and the baby boomers are retiring. There's an increase in strokes. It's unfortunate. If you look at all the research out there, there's an increase in comorbidities and obesity and heart disease, and it's just not going, it's not going to be at one point. It's just, unfortunately, I don't have that much faith in the willpower in a lot of people and getting themselves better. How many people do you know that say, I'm going to do it, I'm going to exercise, I'm going to stop smoking, I'm going to do this, I'm going to do that, and then they don't, and then they get like COPD from smoking, they get diabetes, they get amputations. There's so many people. I mean, it's unfortunate. I want people to do well. I want people to get better, but it just doesn't happen, unfortunately, nowadays. And this is going to get bigger and bigger, the stock, and it's down. And I'm going to jump to its dividend history real quick. Before I jump to how many shares I own and what I did on E-Trade, I do want to discuss the dividend history because I think this is very important. Now it's at 7.4% right now, but slowly but surely it has increased its dividend. So very attractive, very strong, and those buildings are going nowhere. Even with the bug, you know what we do as nurses, we test people, we give them the nasal swab, and then they go to the facility. So we wait and see how they're doing now. Well, in Ohio, usually, I can't speak for other states, but we nasopharyngeal swab people, see if they're positive or negative, and then go from there. Because, you know, sometimes things can be surprising with people and you don't want to get other people infected. You know, I have some beef. I don't like to get political, but I have some beef with the governors of California, Pennsylvania, Virginia, and New York. They sent all these COVID infected people back to the nursing homes and infected all those people in the nursing homes. And now there's articles out there that they're trying to hide it, and stuff's coming out now. When they had those boats to, have people on there and they kind of quarantine them. But anyways, these are in demand. Skilled rehab is going to be higher and higher. I mean, fractures happen, injuries happen. I mean, it's people are in and out of skilled rehabs like musical chairs, which is good. I mean, I wouldn't want to be in skilled rehab for the rest of my life, but these people are paying, X amount of dollars a day to be in skilled rehab. Their insurance is covering it. And then because they're paying and they're having X amount of bodies, then people can afford to pay rent to these guys. So, there's a high demand for, people being recommended skilled rehab. Unfortunately, there's people that shouldn't be at home or not safe at home. And then people like physical and occupational therapy, as well as physicians and nurse practitioners and the healthcare team, realize that this person is not safe to be at home by themselves, and they're recommended skilled rehab. So they go there. And then sometimes people, the physicians at the skilled rehab just say, oh, you ain't going home. You either get permanent placing or, you need like 24/7 supervision. So more and more bodies get filled into these long-term care facilities as well that are connected to skilled rehab. So let's jump to what I did on E-Trade real quick. So what I did on the 28th, right at 9:30 in the morning, I sold 14 shares of eBay and 10 shares of Norton LifeLock. eBay is a good stock and Norton LifeLock's a really good stock. So don't get me wrong on that. But I like the attractive dividend of NHI. Me, again, like I said, I'm not a financial advisor. eBay is a great stock for dividends. I'm not going to lie. Norton LifeLock is a good stock for dividends, but it's just not that percentage that I want. I want 3 to 5%, a little bit higher. So I purchased 15 shares of NHI after I transferred that, and I'm going to wait until I can get money back in my bank account, throw it back in, my bank account, then make decisions about Verizon. Or if I get a paycheck, I may just hold on it because I saved a lot of money before graduate school. I might just hold that money, and make a decision. Should I just throw it in Verizon and then leave it alone? So that's another decision I'm going to make. But this is what is nice. I got 15 shares, So that's almost $15. So 15, 30, 45, 60 right there. Just looks like it's $1 right there. I'm buying more shares right there with this stock. And it's going to it probably will take a few years to recover. So I'm going to jump real quick to how much my estimated income has increased because of NHI. So my estimated income has increased to $1,070. Major change from my previous video that I had, because I had eBay and I had Norton LifeLock, but the dividend is a lot higher, and it's increased its dividend, and it's going to be a lot stronger over time. It's going to recover. I mean, I had to capitalize on this. Real estate, banks, entertainment, those guys are hit hard, but they're going to slowly recover. So that's a nice thing. I'm 35. I got to be a little aggressive. So I'm going to be throwing money in the bank stocks, and I'm going to be throwing money in real estate probably the next 2 years on my E-Trade dividend portfolio, because one, I'm young, and two, I need to get those Benjamins going. Verizon is definitely on the radar, so that I'm not ruling throwing that out. If there is a stimulus, I'll probably throw my stimulus money in Verizon. I'm not going to lie. I don't want to, spendthrift or anything like that. I do have tuition reimbursement coming in. I just need to get, obviously, good grades, and then I'll get reimbursed for this year. But this is what I need, This is what I'm looking for. I'm almost at 100... I'm at $107. So this is, I don't know if this is anticipated. This is estimated. But look at my monthly dividends coming in, estimated income. The compound interest is kicking in. So $81, almost at $100 a month. Now my goal for monthly dividends is $1,000 to $3,000, and the goal on my quarterly dividends is $2,000 to $4,000. So that's my goal. So that's what my plan is, to make extra income, let my money make money, and I don't have to sit there and do a damn thing. So that's what I'm excited about. And it's just going to slowly go there and slowly increase. But again, I have priorities. I'm not going out. I'm living frugal. I'm not living paycheck to paycheck. And if, worst case scenario, the doomsday scenario happens, something doesn't go well with grad school, I could be a travel nurse, pay off that debt immediately, and just go back to getting my dividend portfolio churning. So that's what's exciting about this. So do you guys have any questions for me? Just make a comment in the comment section. Do you agree with this move that I made? Do you like NHI? Would you put that in your dividend portfolio? Let me know what you think. And you guys take care and have a good one.